There's always a lot of talk about saving tax, but there's nowhere near enough attention given to the benefits of deferring tax. So today I'm going to tell you all about how you can do that. Hello everyone, my name is Ethan Rushock, and as I just said, I'm going to be talking to you about deferring tax. So I'm going to talk about the ways you can defer tax, the benefits of it, and then also talking about the benefits of potentially deferring the payments of your tax and why you would consider doing that. So when I say deferring tax, what I mean is by reducing the tax payable in the current financial year. And you're typically going to be pushing that out into either the next year or a future financial year. Now this can be done by two typical ways. We either increase expenses or deductions in the current year, or we reduce income in the current year. So either way, we're going to reduce our overall taxable income and therefore push out some of that taxable income into future years. And the reason for doing this is we're going to have a lower taxable income in this year and therefore paying less tax this year and therefore pushing any tax payments out into a future date. So let's first look at increasing expenses or increasing deductions. What I mean by this is we're going to bring forward things that we have to pay for or we're going to pay for anyway from a future financial year into this year. And obviously this becomes easier to do as you get closer to the end of financial year. So here in Australia, our financial year ends on the 30th of June, and therefore those expenses that maybe you're going to have to pay for in July or August, it's going to be much easier for you to bring them forward into June. Now what you can do here does differentiate between if you're an individual or a business. Individuals, it could be things like you might need some tools or work uniforms, or you've got a license that needs renewal that you have the option to pay for in June. Businesses obviously have a much broader range of things. So it could be major things like new equipment or cars that could make a significant impact on the bottom line when it comes to tax payments. And so your savings is going to be based on your marginal tax rate. So we'll use the average marginal tax rate of 34.5 cents here for this example. So say we've got a $1,000 deduction that's fully deductible in that year that it's paid for, and we decide to bring that forward and we pay for that in June. So in essence, you're going to save yourself $345 on that purchase because that's what the tax portion is going to be. That's what the tax savings will be. So your total value in the long term that you're actually really paying for that item is $655. But the timing of this is really important. So if we pay for this in June, then we're going to be claiming in that current financial year, which is going to end at 30th of June. So you have the potential that the tax refund side of this is going to happen for you potentially in July. So it could happen within a month of you spending money on that purchase. Now, if we take the other situation where maybe we can't buy it in June and we decide to buy it in July, we've got a whole financial year that we've got to wait to end before we can claim that. So it's going to become 30th of June the following year, and then when you lodge your return, so you're looking at 12 months down the track before you get that $345 back on that purchase. So while this is just a small example, that is still $345 that you could have had in your hands 12 months earlier. So if someone offered you the opportunity to have that money now or in 12 months time, you'd obviously take it now. So by just being a bit clever when it comes close to the end of the financial year, you can go, well, I'm going to have to spend this money in July anyway. I'm going to bring it forward to June. Now, you don't want to get caught up in spending money on things that you didn't need or weren't going to spend on anyway, because then the tax you're saving is going to be less than what you're paying out. The other option would be to push income out. So what I mean by this, and this is going to definitely work a lot more for businesses, is you're going to delay when you're receiving income into the next financial year. This is going to depend a lot on how you're structured, what type of accounting method you're using. So you definitely want to speak to a professional. But maybe you've got a big project and maybe it is getting closer to getting pushed out to July, and you make that decision that, look, it's just going to end up getting pushed and it will work well for us tax-wise. You definitely need the proper advice on that because there are some things you're going to need to avoid, but that at a basic level can push tax into a future year, therefore deferring it. This could also work for someone that's potentially looking at cashing out leave. Maybe they cash that out in July instead of June to push that tax implications into a future year. You can definitely think about another situation where maybe you're going to take annual leave or you're going to have a significant time off from your business and therefore no income is going to come in. Well, maybe you're going to do that in June. So therefore you're getting those benefits of pushing income into a future year. There's just little things that you consider that maybe you're not saving tax in the long run, but you're just pushing it into a future year and giving yourself more cash right now. Now, before I get into the next part, talking about your tax rate in different years and why that could affect these strategies, I'd love for you to jump over to the Rushocks Discord. The Rushocks Discord is where I'm talking about my NFT project, Rushocks, and it's also a place where I'm answering tax questions for free tax advice. So if you jump in there, drop your questions, and I'm jumping into the comments. Other people in the community are helping out, and I'm really trying to build a community that helps each other and allows us to tackle some of these complex tax issues together. Anyway, let's get back into the video. Now, where this strategy gets a little bit more complex is when you know you're going to have a different taxable income in different years, where you're going to be changing which tax rates you're going to be paying. So let's take a situation where you know you're going to be earning more money next year. So you know you're going to be on a higher taxable rate. Then you may be going, well, I want to bring income forward to this year, or I want to maybe keep my deductions for next year because it's going to make more of an impact. So it's definitely a situation where you need to understand what's your future earning capacity like, what kind of future tax rates will you be paying, and therefore maybe is it beneficial to me have more or less income in this year. The opposite is obviously true. If you know your income's going to go up next year, well, then you obviously want to bring any income forward that you can this year. And this typically happens in a business setting. So where you know that next year is going to be a really big year, maybe you do want to recognize and push forward as much as you can in June and have a really good month, because you know that your tax rate for this year is going to be lower and you want to use up those lower tax brackets. So it's all about having an understanding of your financial position, and a lot of tax comes down to that. The better you know yourself and where you're at, the more tax you can save. Now, the other side to deferring tax is going to be the tax payment side of things, when you actually physically pay the tax to the ATO for what you owe. So you can be a little bit clever with this. So if you're lodging yourself, you've got to lodge by the 31st of October, and your tax is going to be due within 21 days of that date typically. So you don't have a huge amount. Obviously, you could delay lodging your return till then. You've got 21 days from then. But the reality is that the tax for that previous financial year is going to have to be paid by early to mid-December at the latest. Now, if you are using an agent, you do normally get a deferred lodgement due date of the 15th of May. Check with your agent. But then the payment isn't due until the 5th of June. So you almost have 12 months before you need to pay tax on the previous year. So it can be a great way to have that money sit in your account and gives you more flexibility over the year if something comes up. Now, you do need to make sure you have got the money come payment due date, but it does give you those options. The cool part about this is the income you earned in the July of that financial year we're talking about, the tax on it potentially doesn't have to be paid for almost 24 months later. So in that 24th month, so it's been a long time since you earned some of that income before you're actually physically paying the tax. So you want to make sure you've got a system in place so you've got that money aside ready to pay it. But it does allow you to use that within your business or put it in a savings account, earn a little bit of interest, etc. on your own money before you need to physically pay it out. With this, you want to make sure that is the right thing for you. I know some people would rather go and pay their tax in advance even because they know that they potentially will spend it if they've got it. So if you know you've got a tax bill coming up, make sure you've got the money by the due date. But overall, timing is really key when it comes to a lot of tax strategies, and it definitely can be really important if you're trying to defer tax to future years. Be aware that the ATO could make changes to tax rates or your personal situation could change. You've got to take that into factor when you're doing a strategy like this. But overall, it can be a simple one to implement, but always check through a professional before you do it. I appreciate you watching the video. Make sure you've hit that like button, hit subscribe, go and check out some more of my content, and I'll talk to you again soon.